do you have a Chrome tab open in front of you?
I do. Well,
All
hold
right.
on. Yes, I do now.
I want you to go to injury.com.
Oh, I'm already excited by this.
What's up, guys? JD here, and today I've got James Camp, who was an internet kid just like me. He figured out early how to get a lot of attention and traffic online back when that was a brand new thing to do. And we're going to get into it today. We're talking about business growth, selling to big companies, how we each think about leveling up in our careers and our businesses. A lot of good stuff here. You guys are going to love this conversation. This is so good. Okay, injury.com. And just tell me, paint a picture for people that can't see it. What are you looking at?
I'm looking at a lead form for Morgan and Morgan, which is a law firm that is a injury attorney. But pretty direct responsey. And I actually, this speaks to me in many, many ways.
It warms your heart. So
it warms my heart. Yes.
Yeah. So James, you just said a lead form. So if in layman's terms, it basically says a headline that says car accident, we make filing an injury claim easy. And there's like 5 stars and 100,000 5-star reviews. And so basically you land on this site and they want you to click a button and give them a bunch of information, right?
Yeah.
Okay.
Yeah. And actually, what's interesting too is I recognize Morgan and Morgan only recently because of the marketing they've been running recently, which is super specific to them. But that's why I do recognize that name.
Put a pin in that. We're going to come back to this landing page in a second, but I'm going to go back in time and just kind of tell you the background, why this website exists. So we go back to 1988, and there's this guy named John Morgan, and he's a young lawyer. He's been in the business for about 6 years. He breaks out on his own, and he starts a firm in Orlando. And he's a personal injury lawyer. So he's doing things like slip and falls, car accidents, whatever. Okay, so business is okay. And he's basically getting leads from referrals. And the reason for that is because back in the day, this is back in the 80s, there was actually a Supreme Court case that had just ruled that it was okay for lawyers to advertise, to run ads. But up until then, up until like the 70s and 80s in America, lawyers couldn't actually run ads. So like none of them did. You would never see a commercial, a radio ad, a billboard for a lawyer. And then in the late 70s, early 80s, it becomes legal. But most lawyers still aren't doing it because it's just tacky. Like they feel like this is kind of below me. So they don't do it. And this guy, James, who's a new lawyer, is like, screw that. I'm going to run ads. Why not? So he starts running ads in Orlando. And these are basically like just ads on the radio, buy my stuff if you were slip and fall, whatever. And this guy's crushing it. In fact, it gets so good that he sets up this call center in his office where he's got people answering the phones 24/7 because he's just like, he's getting tons of business. Cool. So that's all going well. He starts running commercials, tons. So this is Orlando, then it's Miami, Tampa, Jacksonville, Texas, Austin. He's kind of all over the place. Fast forward to today, Morgan and Morgan is the biggest personal injury law firm in America. So that's kind of the snapshot story. And so it got me thinking. I went down a rabbit hole and did a bunch of research. And the first thing I saw was that when I go to injury.com, who owns it? Say it loud and clear. It's Morgan and Morgan. Okay, So that takes us here. So what this kind of like, this whole story is like, okay, this is a guy who practices law, and I'm going to assume that he's a good lawyer. He's got a good, case track record. But like, this is just a killer marketing landing page. And if they're doing this, what kind of crazy stuff could they be doing that we're not even seeing? So tell me, like, you're the pro when it comes to lead magnets, landing pages, all this kind of stuff. Like, just give me like a walkthrough on this page and tell me why this works so well.
Well, I mean, the first thing I notice is the scroll at the top, which is just uses a bunch of social proof essentially as seen on, and then they throw logos that they think that the people are going to recognize, which they do, right? Obviously NBC, CNN, Fox, but also that scroll is a reminder subconsciously of a scroll when you're watching news, right? Like Fox started doing that scroll, like a ticker tape, right? It's sort of, it's like a ticker. It's like watching stocks go across the screen. Something about it feels, okay, this is legitimate. What I like about it too, what they're doing is just very, very clear. It's not a lot of copy. It's not pretty. All it is direct response. It's supposed to call you out in a very specific person in a specific place. Car accident, question mark, is two words, right? Super fast. We make filing an injury claim easy. I mean, the point is to just immediately get everyone to follow one path. It's very, I said earlier, it's very direct response. And what I like about this, which I think a lot of people don't do, is that from the jump, unless you go all the way to the bottom, there's really only one path. Like it's classic direct response marketing. There's only one thing that you can possibly do on this website, and that's essentially contact them for them to take your injury claim case on. Like there's nothing else.
Hey guys, real quick, if you're liking this video so far, let me know by leaving a like or a comment and share the episode with a friend. Plus, if you're building a business or hope to one day, grab one of my free playbooks. Head over to jondavids.com/playbook. Back to it. Totally. You can hit the blue button. If you scroll down a little further, there's another call to action, but it's the same thing. It's sign up in 2 minutes. So they have like the same button, within one scroll. And then if you go further, you basically hit testimonials, and it just keeps giving you that absolute like click here to get this free thing. And the other thing, which is like, it's the premium aspect of it, is this is injury.com. I mean, this domain must have cost them $1 million.
Well, so there's a thing. I don't know how to explain it. I'm sure there's like a much more clever way to explain it with some terminology that I don't know. But when it comes to domain names, like I'm the type of guy who's like, oh, your domain doesn't matter. It really doesn't in 99% of cases. I think that your domain name does not matter. But there are super premium domain names where all of a sudden it becomes very, very, very worth it. Injury.com. I think sex.com sold for like $20 million a few years back, right?
Yeah.
I know people were looking at deposit.com for a deal I was working on, where these one-word domain names
sold 3 years ago. I think business.com is owned by Bloomberg. It was like $6 million.
But something like that becomes super valuable. What I do think is really interesting too, as I've thought about this myself for projects, is if you can go far enough on that end of one-word domains being valuable, it's not a bad investment, right? You're never going to lose your money on it. I mean, it's not going to zero. Like if I go spend, $100,000 on like mypersonalinjury.com, it's still a good domain name. Probably is still not that cheap, but it might be tough to find that buyer for it, right? But injury.com, someone's going to buy injury.com always, and I think and it just is so memorable and so simple. They probably get type-in traffic for it, which I don't think people even think about, right? Like people just being like typing in injury.com.
Totally. I mean, they probably get like SEO, Google probably indexes anything with the word injury, probably injury.com is at the top of the list. And I'd imagine it's similar on the LLMs, on ChatGPT and so on.
Yeah, that's a great point.
So, okay. So the other thing here is, so basically you have this law firm that almost seems like they don't even need to have a law firm, because like you and I talked a bunch of times about this. I remember, and I've heard you talk about this in other pods too, which is like a great business is just a business that collects leads and hands them off to others. So even if Morgan & Morgan didn't exist, this site is super valuable just as a lead magnet.
I mean, I think that's anyone, it could go like Lending Tree, right? Like any of those, right? They're just lead brokers. All they do is they take this data, and what they could do here, what Morgan & Morgan could do, which they're not, but someone else could do, is take this data and then go sell it to 10 different injury attorneys at the same time, right? So they'd collect right here, and they would say to 10 different injury attorneys, pay us $500 a lead, or I don't know, probably good injury claim. It's probably worth a lot of money. And say, we're going to send them all to you in real time. You can call them and you can pitch them yourself. So I think people don't recognize there's a lot of that,
It's actually even better. So because law is regulated, what Morgan & Morgan actually does, I might be getting some of this wrong, but it's directionally right, is they have a whole referral network. So they have lawyers all over, I think in 48 states, and they can send leads their way. They cherry pick the best cases for themselves. They send everything else away, and they take 20% of whatever the settlement is, because lawyers can do that with other lawyers. You and I couldn't do that. But if you're a lawyer, you can actually take a commission of the settlement.
I love that. That probably, and there's probably a bunch of industries like that, right? Like where I would assume real estate commissions as well. I don't think you can take unless you are licensed to do so. Carry on capital, selling securities, you have to be licensed to do so. But I love that. I mean, this is I think that the average person doesn't really understand. And I don't mean like that they can't. They just don't see that in the back end. This is happening everywhere, right? So I see it all as someone who recently looked for car insurance too. You'll see it everywhere with car insurance. Like you think you're signing up for an insurance quote. You're not. You're signing up for a lead magnet where they then sell off your data to 30 insurance brokers, right? That's why you're going to get, same with loans, right?
Yeah.
So
when I was growing up, one of the guys on my street who had a big house, and whenever as an adult, I think back to the guys who had big houses and I'm like, what did they do? And there was a guy on my street who had a big house. And I remember what he actually did. I found out when I was in my 20s was this guy owned a bunch of taxi licenses. They're called medallions.
Yeah.
This is
Yeah.
pre-Uber. And so he owned like 20, 30 of them, and he would rent them out to taxi drivers who would pay him basically like whatever, $2,000 a month for the medallion. But here's the thing. In order to own the medallion, you had to yourself be a licensed taxi driver. So this guy actually had his taxi driver's license, but he never drove a cab. But like, that's the example. Like, he was only able to own the medallions because he had the taxi license.
Well, I think one thing that is really, really interesting about this model, basically the affiliate model, is there's a downside and there's a positive side. I was a big affiliate marketer when I was a kid, and I've done a lot of advisory to affiliates that are now trying to build brands. A couple of years ago, there was a lot of people that were making a lot of money just taking a commission and thought, oh, I want to own the whole, the whole value chain. I want to own the brand, right? Which is the obvious thing to think. Well, here's the interesting part is that, let's say, it's easier for me to think in sort of consumer for a second to explain this, but let's say you're a direct to consumer brand, right? And on a good direct to consumer brand is probably operating like a 15% EBITDA margin at the bottom, right? I mean, after everyone's getting paid, if you're tiny, doing a couple $100,000 a year, maybe you're making 30%, you're taking it home. But in general, at scale, 10, 15% margins would be totally reasonable. Okay, so and then you might pay an affiliate to run ads for you, right? To take commission, and give them 25%. So then you think, oh, well, the affiliate, like, they're screwed because they only get the commission from that one sale, and then later on the brand gets to keep that 15% in perpetuity. Yeah, but the brand has to do all the fulfillment. The brand has to do all the customer service. The brand has to actually do all the work, right? And so even though maybe it feels like more short-term money, the affiliate side of this, like, you don't own a brand, although clearly Morgan & Morgan owns a brand here. They've created like the brand equity and the value. It's like you might actually make more money than the brand does in a lot of affiliate things with way less work, because you don't actually have to fulfill on the product. Now, you don't get the enterprise value. You don't get the forward multiple on the exit, but like 99% of businesses will never sell. And the reality is that, like, I think most of the annoying part for a lot of people about running a business is the fulfillment, is the customer service, is the,
That's so true.
So I think a lot of people later on realize, like, oh, maybe just being an affiliate's better. I make more than the actual business does on each sale, and I never have to speak to a customer ever again. So anyway,
I've heard John Morgan say in other interviews that their 20% take on the referral cases are pure profit, and it is a massive contributor to their bottom line. So I totally buy that. I almost wonder on this landing page, injury.com, I almost think that they shouldn't have the Morgan & Morgan logo. Like, I wonder if that's actually taken down. I love that, actually. Conversion.
Yeah. Where it feels like just benign, and it is just like connecting you only with the best law firm, no matter what, right? As opposed to potentially Morgan & Morgan. With that said, I think, and I could be totally wrong, I think I saw an ad for Morgan & Morgan somewhat recently that was like very sort of fun, forward-looking on social. And I think they're like the number 2, or did you say the number 1, number 2? They're like top 3
number 1 personal injury firm. In fact, the only law firms that are bigger in America would be like the biggest white shoe corporate law firms. But in terms of like personal injury kind of stuff, these guys are number 1.
I mean, well, the other part of that is that, like, I always find it funny. Like, I've had some success, you've had some success, but I'm sitting here pontificating on like how they could actually run their funnel better, and clearly they are. they figured it out. You know what I mean? They've figured out how to grow in a way that I haven't. Right?
$2 billion law firm in terms of annual revenue, income, whatever. So okay, so when I saw this, and the reason I was so excited to talk to you about it is because this is the same kind of stuff that you and I were probably doing when we were like 17, 18. Like, I was doing it in college. I was doing this on a small scale. I made $300,000 doing this. I built a business making $300,000 a year. So one-man show, basically on affiliate type stuff. I was getting traffic from one place, sending it somewhere else. And I know you were doing similar things. And the kind of like mind-breaking part of seeing injury.com for me was like, oh, this also works on a $2 billion level.
Sure.
What's that back end? Like, if your back end is I'm selling lemonade, you're going to make a certain amount of money. If your back end is I'm settling 200 lawsuits a month, you're going to make much more money. So it's really about the back end that defines, like, the leads are the leads, but it's like, how are you monetizing them?
Yeah. I mean, in general, the first time this really kind of clicked for me, I was same thing as you, in my late teens doing a lot of affiliate marketing. I realized that with volume, you could get paid more, right, than they were paying you initially. But the thing that clicked for me a lot in the past few years along these lines was, like, anywhere that someone is placing an ad, as long as that ad is running, and we're assuming it's profitable, because the longer it's running, it's profitable, right? An affiliate network or an ad network is taking a vig on that, right? So Google takes 50% basically of every click on a on a website or a YouTube ad. If you're getting $1 for every 1,000 views, to make this super simple, right? That means that hypothetically you could be getting someone's paying $2 for those 1,000 views on your website, and then if you can go direct to them, you can literally double the amount of money that you're making. Now, obviously, again, there's much more fulfillment process. There's how you're qualifying those leads, et cetera, et cetera. But then even more to your point, which is that if someone can pay $2 for that lead, it's because they're buying that lead profitably, right? So let's say that they're running on a healthy margin. Maybe that $2 click they're paying, that you're getting $1 for, that Google's taking $1 of, they're actually making into $6. So to your point, like if you actually own the back end, that click that you as a website owner or an affiliate or whatever, right, like creator are getting $1 from might actually be worth $6 if you can own more of that value chain, right? It's just interesting to think that way.
Well, and that's I totally hear you. That's why category selection is so important. Like if you had to build an affiliate site that like drives people to buy lipstick versus an affiliate site that drives people to get their credit card or their mortgage, obviously like you can do way less volume and every single person is way more valuable on the second one. So it's like, yeah, I could sell 1,000 sticks of lipstick, whatever, cool. But if I can help you sign up 10 credit cards this month, I'll make more money. So like you have to really think about, and the other side of that is like I think about the creator economy, and I think about all these people that are building channels on YouTube, Instagram, whatever. And because of Influicity, we get so much inbound from creators that are trying to make money from sponsorships. And at the end of the day, I'm like, you could have 500,000 people following you on Instagram, but unless you have a back end, like you really can't rely on sponsorship as your main monetization. But if you had a back end, a product, a hair care thing, a financial services, what advisory, whatever it is, like, hey, how about giving finance advice and then having an accounting firm on the back end? Like that's where there's real opportunity.
Yeah, and you can sort of pick up. I know creators who own a business, but also like I don't want to say pick up crumbs because it's a lot of crumbs, but do make very good money in sponsorship deals on the side as well, right? It's not sorry, not all or nothing. I do think what's really interesting is your point about credit cards. Sometimes the best way it's just hidden, right? Like the points guy. Like that's one I always talk to people about. Like the points guy is classic. It's how to credit card hack points for flights, right? Points guy does $35 million a year. You know what I mean?
Are you serious?
Yeah. It's owned by who's the owner? I forget.
Pointsguy.com. Your life rewarded.
Yeah.
Is this just a blog? So I've heard of this guy, but I haven't gone to this website. So if I go to the pointsguy.com, it looks like a blog from 2008.
Yeah. And it's owned by a company called Red Ventures.
Yeah, okay. I know Red Ventures.
Red Ventures owns the Penny Hoarder. They own Points Guy. Like, all these blogs, right, that are just making affiliate commissions, and I bet, let's see, I'm very curious. Red Ventures revenue 2025 is estimated to be $1 billion, although they have been at $2 billion before. So,
So the Points Guy in particular, which is just one piece of Red Ventures, the Points Guy makes money. So if I go to the site, I see an article at the top. American Airlines adds new rare Boston route. Okay, cool. So if I click on this, I'm going to see ads for like credit cards. Is that the idea?
Yeah, for credit cards, right? And so then they get paid a commission for anyone who signs up for a credit card, right? And so like they built this whole brand on reviewing flights and reviewing airlines and how to stack credit card points. And they're just a funnel for Amex, really. Do you know what I mean? Like, for or other credit card companies. But yeah. And they probably get paid. I mean, I haven't looked at the payouts on a credit card affiliate sign up in a long time. But I mean, the ones I remember were like $300 to $500, and I bet for them they get way more, right? If you're advertising, if I can see that whatever you see the average Joe can get paid for sending a sign up, I promise you, if you're sending them $20 million of signups a year, you're working directly with the advertiser, you're getting paid much more money. So they're probably getting like $1,000 plus, $1,500 plus for every credit card sign up. And then America, credit cards are
back in my affiliate days, we had Capital One. And this is like 2006, 2007. So Capital One was paying us, or the agency that represented Capital One was paying us like $90. Sure. It wasn't even accepted. It was application, but the application could have been denied.
Yeah.
So you have to figure they're going to deny like whatever 4 to 5 people, and then but then the agency was probably getting paid like $200, and
Yeah.
then Capital One was paying $500. So yeah, the money is real here.
Oh, yeah, yeah, yeah. I mean, that's sort of the first money I made in my life that felt significant was we were just brokering offers. So what I mean by that is like we were just brokering leads. So freecreditreport.com was the first big one I ran a lot, which was I'm 37, so I remember freecreditreport.com ads. Many people will not, but basically it was owned by Experian, and was credit monitoring. It wasn't free though; it was free for the first 7 days, and there was $120 a month. But we were getting paid. I think at one point I was getting $45 for every sign up to for every free trial on freecreditreport.com. We were paying out 28, 29, right? So like we
Mhm.
were just taking that middleman, and you do that with a few thousand leads a day, all of a sudden you're doing, a pretty big business. So
Yeah. The other one, Red Ventures is a big one. Industry Dive is the other. Have you heard of these guys?
I vaguely sounds familiar, but let me look them
So
up.
Industry Dive, if you go to like there's marketingdive.com, they have all these dives.
Oh yes,
And
I do know what this is. Yes, yes, yes.
yeah. So this sold, I think it sold for like $500 million to Informa Tech Target. And basically, this was the same model where we're just going to build these highly verticalized business trade websites. So, like Marketing Dive, talks about what's happening with PepsiCo, what's happening in the ad industry. And literally, it was like the same website design, the same writing team. Let's just like blast out and build our mailing list as high as we can. And if you have a marketingdive.com, I don't know, maybe they get whatever 15,000 unique visitors and they've got a mailing list of 20,000 people, but this is super valuable to anybody who wants to reach marketing executives. This company
Sure.
sold for hundreds of millions of dollars.
Yeah, yeah. Well, I think that the trick there is to really niche down, right? Is to find that vertical that you want that you want to be in. I think that in general, I've been advising a couple companies recently, and everyone's so worried about giant TAMs. And like to be honest with you, unless you are playing in a like in venture where you have to have this 10, 11 figure outcome, you don't really need to worry about like I promise you there's enough people in your niche in 2025 to build a multi-million dollar business. Like any niche in the world. Like if it's specifically white poodles grooming, I would bet that we could figure out how to pull $1 million a year off of selling off leads, for example, about grooming for white poodles in the United States. I mean, I'm sure there's 100,000 poodle owners with a white poodle. I'm making this up, obviously. I
Yeah.
haven't done that
No,
research, but yeah.
a buddy of mine is in the weight loss nation. He's crushing it. He's done, I don't know what the annual revenue is, but like lifetime business revenue of like $70 million over the
Wow.
last like decade. And his niche is weight loss, but in weight loss, it's women, and in women, it's over 45, and in over 45, it's like experiencing problems with menopause. So it's
Yeah.
like he goes that tight, and that is tens of millions of dollars a year at this point,
Yeah.
just selling like a service to those people.
Well, and to go with that, I think it's really important to recognize, to circle this back to the marketing function here. If you want, I'm a 37, I told you earlier, I have a torn meniscus, right? 37 years old. I'm very active. I live in Los Angeles. I was doing a lot of distance running, and I have a complex medial tear in my meniscus. I've had 2 surgery consults. I have another one on Thursday with a third person to get an opinion. I'm going to have 3 surgeons. If one of them says to me, hey, or I'm an orthopedic surgeon. I do knees, I do ankles, whatever, right? I'm, like, all right. And one says, oh, well, I do knees for old people normally. And then the third person says, like, I normally work with athletes in their mid 30s who have complex medial tears in their meniscus, who want to get back to being active. Unequivocally, like, I'm signing up for him. It doesn't even matter. Like, there's just not even a question at all. And I think people don't recognize that. And this goes back to that old marketing, adage, like you sell one thing to one person, right? And like, I promise you that one person exists 100,000 times over, like in the world. And luckily, because new people are born every day, and new people, to that point about he sells it to 45-year-old women, right? Like every day there's 10 million new 45-year-old women. I mean, like it's not like that ceases to exist. Everyone continues to age and grow, and you know what I'm saying? So it always is there.
It's so true. So you mentioned that you're kind of you're 37, and now you're having your first like medical stuff that you got to worry about your body
Yeah,
and whatever. But you also told me before the mics heated up that you're going through a bit of an existential crisis
sure.
because there's a business. So tell me about the business you're working on now that is not going well.
Sure. So this is existential crisis number 2 for me. I think that I will probably call it my midlife crisis. I
It's
hate
only
to
10
admit it.
a.m., man. The day is still young.
Yeah, there could be 4 by the end of the day. No, but I had one in my mid-20s. I ran off to Malaysia for a year and a half and, like, totally reinvented myself. And then, like, I realize now, 37, the average male lives to, like, 78. This is roughly midlife crisis, right? So it sort of makes sense here. So I have decided for the first time ever, I spent a couple years trying to decide what I want to do next. I sort of sold a company, I bought a company, sold a company, did a lot of advisory work for small brands, people buying brands. And after a couple years, I really wasn't excited by that anymore. So I decided I wanted to either go buy something very big, like $100 million, and took a couple swings at that. Me and a couple friends tried to buy Playboy. That didn't really work
Are you
out.
serious?
Yeah, I mean, not, it didn't get that far. We spent a few months on it, got like Fortress was going to refinance the debt. There's like a, $200, $300 million of debt on the business. It trades at like a $60 million market cap. It's the top 10 most recognized brands on the planet doing hundreds of millions of dollars in revenue, trading below $100 million market cap. We wanted to make a tender offer to buy Playboy, right? To take it private, restructure it, and then sort of take out the porn, because porn in an AI world is pretty screwed, and I think that, and wanted to make it more of like a lifestyle brand with hotels and coffee table books and
Totally.
all that stuff. And anyway, that didn't work. But so then I came across this business idea, which was starting from scratch. And my world has been, as you know, for the past few years, like buying and helping people buy things, right, that already have traction. And that's been my shtick, right? It's been like, skip the 0 to 1. Why don't you buy something, right, that already has some traction? Because I've made it work for me. And so I decided I wanted to build something from scratch. And I realized it was not going to be the way I normally do things, which is sort of bootstrappy or a little bit of capital. And I put up a little money myself to skip the 0 to 1 so I could pay developers. And I've been working full time on it. It's a vertical SaaS business that makes compliant messaging software for financially regulated firms. So if you're an investment
Explain
bank,
that to me like I'm 5.
yeah. So if you are, I'll explain it to you like you're 8, because 5 might be
Okay.
tough. We'll do 8. So if you are an investment bank, if you are a registered investment advisor, if you are a crypto company, if you're a fintech, if you're any of these financial companies, right, you have all this messaging that goes to investors. So to you, to me, to everyone. And you are regulated by regulators on what you can actually say, right?
Mm.
And what they do is they take your messaging and they archive your messaging. Every message you send, if you work at an investment bank, is put into an archive for the next 5 years, I think, maybe it's 7, depending on the firm. And that message, that archive is there for one reason, and one reason only. That is so the SEC or FINRA, so a regulator can come say, you know what, John, you broke the law there. We should fine you, right? And so there's hundreds of millions of dollars of fines that these banks pay every single year.
So if I'm a bank and I send a message out, and then let's say I say, get this savings account product, whatever it is, and then somebody, let's say a year later, complains that they did that thing and they were screwed and it was whatever, the SEC might want to look back and see what the message was. Is that the reason you would save it?
Yeah, essentially. And so there's hundreds of millions of dollars every year of off-channel comms fines. So what does that mean? That means exactly that, right? That people are saying things that they should not say, essentially, to the wrong people.
Mm.
And you get fined later, right? So my point was, in general, there's a bunch of agentic abilities to make sure that people don't say illegal things, whether on purpose or by accident, in an AI
Okay.
world. And so I have spent, and now that's probably more like for 15, maybe like a 21-year-old would understand what I said, maybe not 8 or 5. I apologize.
I sort of get it.
Yeah,
Get it.
I mean, we don't. If you don't think of it not as banks, right? The FTC is much easier to understand, right? Like, if a brand makes a claim like you're going to lose 100 pounds in 10 days, guaranteed, right? That's illegal. The FTC comes in and says, John, you can't say that, right? Like, we're going to fine you $300,000 for lying, for false advertising, right?
No, you know what it reminds me of, James, is like if you're in an employer-employee relationship, and if you're an employer, if you're a smart employer, you keep all records and document
Yep.
everything. Like if you want to do it, if you want to be buttoned up. But if there's ever a case where a labor board or the government, whatever, looks at a case between an employee and employer, they're always going to side with the employee. And the reason is simple. They say, we're going to assume that you as the employer have more resources, you have more experience, you have more access to lawyers than a single employee. And so they always side with the employee. And it's got to be the same in the finance world too, which is why you said, they wait longer, and they also always, sue you because, yeah, if you're JP Morgan, obviously you should know better. And if I got screwed by something you said, even if it was an accident, even if you didn't mean it like that, you still have to side with the little guy. So I totally get that.
So yeah, so I mean, to make it super simple, we act as like a AI compliance officer. That's the business I'm building basically is an AI tool that helps banks stay compliant, helps banks not break rules, right? I mean, that's probably the easiest way to explain it. And so what I want to pull something up right here really quickly. How much was JP Morgan fined last?
Oh, seriously. I bet you, listen, like, I wouldn't be surprised if it's almost like a line on their P&L where it's like, these are the fines that we know we're going to have to pay next year because they're going to slap us with all kinds of liability.
2023, 75 million, 2020, 920 million, big fines, right? And so they're for different things. But point is, it's very different. Selling AI compliance software to banks is very different than sort of what we spoke about recently, and that's because of how regulated that space is, right? Same thing, obviously, with the lawyer stuff, right? Like, it's just They don't let just anybody come in and do it. So
totally get it. So how does this relate to your vertical SaaS? What is your solution to this?
So the solution is basically this ambient compliance copilot on your desktop, everywhere, every person in a bank being the broader term to put it in a financially regulated firm, but has a little desktop copilot that sort of helps them stay compliant, and then does a lot of agentic work that a compliance officer would do in terms of archiving, understanding where the messages go, and then doing audit prep. That opens up a whole different world, a whole different, much longer conversation. But all these firms get audited all the time. And so compliance officers do these mock audits. It takes them months to prepare, basically for like getting ready to go fight regulators and make sure that they don't get fined. So think of it like that.
Can I invest? It sounds great.
I appreciate that. Well, it's funny because I have a bunch of money circled and I put up a bunch of money myself. The difficulty that I've been hitting is, and this is a much longer conversation than just this pod, but there's two ends of the market. And one, the very long tail of the market is these very, very small RIAs, registered investment advisors, guys who say, hey, John, let me manage your money for you. You've got a retirement account. You've got your 401k. You have $300,000. Let me help you with that. And those are 1 to 3 person shops. Now, the problem is that those shops don't have a lot of money, right? They do have a burning problem, which is that they're worried about getting fined, but they don't have much money. And then the other very far end of the market is like Bank of America, is Schwab, is Fidelity. And those are the firms that will pay you $3-4 million a year to make sure that everything works. The problem is selling into one of those firms is just very, very, very complex and different than what I've done, right? There are 2 to 3 year sales cycles with procurement teams, and 20 people have to sign off. And, you don't just cold call the chief compliance officer at JP Morgan and say, hey, how are you doing today, John? Do you want to check out our software? It's a much more complex process. And so it's trying to find what part of the market we serve correctly upfront, right? Like where we go to market, GTM, so to speak.
Yeah. The whole selling to enterprise versus selling B2C or even selling mid-market. So when I started Influicity 2015, an ad agency specifically for enterprise clients, because I didn't know any better. And so we were just selling influencer marketing services. But because I was a dummy, I was like, okay, I'm going to sell to L'Oreal and Procter & Gamble and Domino's Pizza, because it's just those are the names I knew in my head when I thought about brands. And so I would go literally every other week to New York City, and I would sit in the ad agency offices, and I would sit with CMOs whenever they'd give me time. And I had some relationships from my previous company. So there was a lot of hustling, a lot of door knocking. And that was how I ran Influicity for the first 5 years. And we did pretty well. But yeah, every sale that I made was 6 months and a whole lot of phone calls and a whole lot of rejection. And then you would close 1 or 2 deals, but those 1 or 2 deals would pay for everything else because they were 6-figure deals. And so that was one life that I lived. And then in the next 5 years, kind of 2020 to 2025, we went much more mid-market and I would say SMBs. But here's the interesting thing. If you're talking mid-market in the USA, you could have companies that are still $50 to $100 million in revenue.
100%.
And they still have, whatever, $5 million to spend on marketing every year, but their CMO or their VP of marketing is not getting hit up 17 times a day, like the CMO of L'Oreal. And so what we found was, okay, these guys, they've got scale, they've got size, they've got real businesses, they've got real executive teams. like this is the market. And so for us, like mid-market is now the sweet spot. We're actually even going down further to like small business, like companies under 10 million in revenue. But like there's a ton of companies that you can sell to that no one's ever heard of, because like they're just the biggest ones in this region. But it's funny that you kind of have, and like the end of this story is like when I talk to people who grew up selling to consumers versus people that grew up selling to enterprise, to B2B, it's like two totally different types of business. Like you said, if you're used to selling like with a landing page and a click, that's very different than selling to $1 billion enterprise.
Yeah, yeah. I mean, incredibly different. And I think that's one thing that's been kind of what excites me about it, and ironically why I'm a lush for pain, right? But I like doing stuff that's kind of hard, and it makes me excited to do it. But then there's the other piece of my brain is like, what are you doing, James? Like, why are you not doing what you're really good at, which is like consumer? Like, I really understand how to convert someone through marketing, right? As opposed to a sales function, right? Like, there's a very big difference. And even to your point, I had a conversation with a friend who sells managed IT services to Fortune 500s, like true enterprise contracts, 5 million plus a year recurring, right? And, for him, I asked him how he does this, right? And he goes, listen, it's probably our fault. He's a partner at a firm that does this, very successful. Because it's probably our fault. We tried SDRs, we tried LinkedIn, we tried cold email. None of that works for us. Because what I do is I befriend someone who's high enough up in the org that I want to work with, that they can walk me through the procurement process as if it does not exist. And it might take 6 months, it might take a year, but by the time we get to procurement, they're signing off on it already because Joe, who's their CMO, has told them, don't worry, he's the man, let's do it. And I said, well, what happens for people that don't know what it is? I said, what happens if there's an RFP, right? What if you have an RFP process? Normally at big orgs, there's a fiduciary obligation to shareholders to protect everyone from this kind of stuff. They'll say like, well, if it's over a $500,000 contract, as an example, we have to do an RFP process. We have to send a request for proposal to 10 agencies and see all the bids that they give us and pick the best one. He said, okay, well, if it's a $500,000 contract that we need, we just chop it up into, two $250,000 contracts.
Oh my God. Are you serious?
Yeah. And he goes, and they'll walk you through. I mean, as long as like, and this happens all the time, right? Like, and this, it's just it's a little bit of nepotism, for lack of a better term, right? Is the way you're structuring it. Some people hate Hormozy. Some people love Hormozy. I think he's very polarizing, but actually a fantastic marketer. Hormozy said something very recently that I thought was apropos of this and incredibly interesting and correct, which was that it's very hard for businesses to scale over $10 million a year if you're selling things that cost a few $1,000s a month. You either want to be selling things that cost a few $100 a month that a small business, even on its worst month, can continue to pay you, or you want to sell things very upmarket to firms that $10,000 or $20,000 a month is nothing when they're having a bad year, right? Yeah. And I think that we get stuck in our little bubbles and we don't recognize that a McKinsey, a Bain, a BCG, I have a lawyer now for this new company that's Oric. My attorney's $1,450 an hour, right? Like my point is like, and he doesn't make money off me. His hope is that we're going to IPO one day, right? Like he's not really excited. In fact, he defers his fees with my company. He defers his fees with me. He says, hey, we'll give you your time for free for up to $20,000 while you raise this capital, because I know you're going to raise this money and I want to be your lawyer when you have to pay us $6 million for your IPO, right? And so we get stuck in these little bubbles where we think like, oh, $5,000 is a lot of money. But to your point, if you go up market enough, there's someone paying $50,000, $100,000, $1 million, right? And so
true.
You just got to figure out where you want to sit, where you want to play, to your point. Like, do you want to hang out with the 6-month or 1-year sales cycle where you're taking people to dinner because that world exists? Or do you want to go hop into Meta and throw 20 different ad creatives in tomorrow and see if they're going to convert? It's two different worlds.
Yeah, you've got to choose your game, and then you also like I've had many moments that have like they're frame breakers where it's like, oh, I got to this point, and now I realize that everything that was limiting my beliefs before is gone. It's just like I hit the delete button because I've actually accomplished this thing that I didn't think was possible. We've had experiences where the thing that we used to sell for $1,000, we're now selling for $30,000. And the only reason for that is because we just changed the customer. We said to this person, this is only worth $1,000, but to that person, this exact same thing is worth $30,000. And like that exists all over the place. I want to tell you one quick thing. So do you know David Rubenstein, Carlyle Group?
I do know Carlyle Group for sure.
Yeah. So David Rubenstein was one of the three co-founders, and he's the guy. He's kind of the most public. I think he's probably the only guy still like chairman-ish involved at all. But so David Rubenstein said in an interview, because like Carlyle went in the 80s from being like nothing to now one of the biggest private equity firms in the world. And he said, we would bring on people like former presidents, former ambassadors, the president of France. We'd bring them on as like advisors to Carlyle back in the 80s and 90s. And their only job was making a phone call and setting up a meeting with this prince in Dubai so that I can go there and pitch Carlyle Group. And like, he said like very, very simply, like the reason we had, I think it was George H.W. Bush as an advisor is because he had a better Rolodex and he could get meetings that I couldn't. And that was the whole business model.
Yeah. I mean, I think that at that scale, what's interesting is that you've made me realize something here, because I was going to say at that scale, it's all relationships. But what you realize is that even the marketing scale, when we go to circlethis2injury.com, right? Even the very consumer focused, you're essentially trying to compress the belief and trust of a relationship into a landing page, right? Into your marketing copy, into your funnel. All sales and marketing is just relationships, right? So at scale, that relationship is just interpersonal. Like, how well do I know and trust this person? The thing about consumers, you're just trying to compress. I always say that sales and marketing is just trust compression, right? You're just trying to get that trust and that relationship built through like 100 words of copy, right? That belief that this is the right person to work with, that this is the right, and I think I always used to say that I did a lot of advisory work for brands. And there was a point where I was working with like expert insight firms who were like charging $1,000 an hour for my time, right? They were taking a little piece on it, whatever. And what I always used to say is that, I'm positive that I could look at any sales funnel and find like a 1% inefficiency. But if you're making $1 million a year, that 1% inefficiency is only worth $10,000, right? So you're not going to pay me $100,000 to fix that 1% inefficiency for you. But if you're making $100 million a year, right, that 1% inefficiency is $1 million, right? So at $1 million, sure, you'll pay me $100,000 a year. That goes exactly to your point about the exact same thing that you're solving to the right person is worth $30,000 versus worth $1,000.
What's this pain worth eliminating? If we can eliminate this pain for you, what's that worth? My sister runs a dog walking business, and I have this conversation with her because for a long time she was selling her dog walking and dog training services to like just anybody. And I said, go to the richest neighborhood in the city, go to the people who have the biggest houses and the nice cars in the driveway that are all owned by their businesses because they don't pay for anything themselves. And like their dog that they just got because their kids have been annoying them, who's ripping up their couch and peeing on their $17,000 rug, to that person, training that dog right now is worth $5,000, $10,000 versus this person who wants to train their dog, but they'll pay you, $50 an hour. Like, you just find that customer.
I mean, I think, it's very interesting. I think this is a perfect example of it that only clicked for me in the past year or two when someone broke it down was flying private. So a lot of people fly private for fun, whatever. You're rich, you do whatever you want with your money. But let's talk about it actually from a business perspective, right? If you are a senior partner at McKinsey, for example, just as an example I use often, or even a normal partner at McKinsey's billable day rate's probably 15 grand, 20 grand. That's not even an exaggeration, right? You're talking about like a $2,000 hour at an 8-hour day. Yeah. It's probably $15,000, $20,000. And a senior partner more, right? That gets billed for the firm. So now let's make it easier. Let's say you're someone who's very successful and you make $5 million a year, right? $5 million a year is $100,000 a week that you're taking home, right? 52 weeks a year, 5.2. At $100,000 a week, every work day is worth 20 grand to you, right? So for 20 grand, if I can go book a PJ for $11,000, just as an example, that fits a better timeline for me or a time frame for me, and I can work on the plane the entire time, and I can actually get to Des Moines, because obviously a lot of the work for private jets is much more like hubs, like third tier cities. I don't mean like
middle America,
Arms, like places where there isn't a giant, aren't like 40 flights a day, right? So if I can get somewhere where I want to be in the same day, and maybe bring my whole team with me, maybe I bring 4 people who also are worth, $5,000 a day, $2,000 a day. Their time is worth that, right? Like, absolutely, spending $10,000 on that private jet flight is worth the money, unequivocally. Now, for me, I'm not billing $20,000 a day. So for me to spend $10,000 on a private jet flight would be stupid, right? But for the right person, it actually makes sense on a P&L. And it's very hard to comprehend and until you're in that world, that there is money floating around like that, right? That there is value in business at that. By the way, 5 million, let's go really upmarket to the private jet people. There's plenty of CEOs making $50 million a year, right? So there are times worth $200,000 a day, right? $200,000 a day. Of course, I'm going to fly me and my team on a PJ instead of going 2-3, and I'll stop, I promise, in a second, but at $200,000 a day at a 10-hour workday, it's $20,000 an hour your time is worth, right? I mean, let's just be real about that for a second. At $20,000 an hour, of course, I'm going to take a helicopter to the airport as opposed to sitting in traffic for an hour and a half. Of course, I'm going to take a PJ as opposed to going through the airport for 2 hours, because with the PJ, I drive onto the tarmac and walk onto the airplane. And if I can save an hour and a half of going through the airport and going through TSA, I just saved $30,000 just in that one function. So anyway, it just sometimes it clicks for me.
I've had these conversations with people, like because of the podcast, I talk to a lot of super, super wealthy people. And when the mics are off, the things that they tell me and the things that I see, like if I go to their houses or whatever, by the way, these are not flexes at all. Like they don't show this to anybody.
Sure.
It's not about that at all. It's like, no, the reason I have 2 nannies and the reason I have this, the reason I never cook a meal is because just what you said, like, yes, between the hours of whatever, 9 and 5, I know that every hour and every 15-minute increment is worth this. And it just makes no financial sense for me to make my own breakfast. Like it just, I can't, like I'm doing a disservice to my team, my family. But then even on a micro level, because this is all like up in the clouds, okay, I get it. But like, how could 90% of people use this? Think about something as simple as like, skip the line here, or like pay the additional $30 for parking here, because like it is, I even hear people say like, there's this whole like this theory of like, don't spend money on coffee, or don't spend the $2.50 a day, Gordon Ramsay type mentality. It's like, okay, I get it, but here's the other way to look at it. What if making that coffee costs you this time that you can't take your kids here and you can't, you're late for work? No, actually going and stopping and paying for the coffee so that I can be at work this much longer and make that much more money. People are very much set in this like deficiency mindset of like, I have to save everything. It's much easier if you save money. The most you could possibly get to is zero. Like I'm spending no money. But if you actually spend your time making money and try to maximize, there's no upper limit.
It's infinite. And I think actually the perfect one that I get myself caught in all the time, because, and my girlfriend tells me all the time, I'm too frugal, right? Like, I'm like constantly, but I also didn't have money for a lot of my life, right? And so it's very tough, right? To break that mindset, is buying flights. I will spend 3 hours looking at flight prices, trying to figure out the right time. Do I want to get to the airport at 9 a.m.? And, I'm going to get to the airport at 6 a.m. Should I buy this flight? And the reality is that, and I will spend 2 to 3 hours, and I don't mean necessarily in one sit, like sitting down, but like looking at flights over a 2-week period about something I'm thinking of doing. And I will end up saving like $60, right? $60. I 100% can tell you I think my time is worth more than $60, $20 an hour. For sure, for sure. And I think to your point, actually, it's just a nice reminder. You never know when a conversation will remind you of something. It's a nice reminder, like you said, money is in many ways infinite. I really, really forget the money printer, right? Forget that inflation exists, but it's actually just ethereal and we print it off. When we go back to me saying that there's always a new 45-year-old woman for a weight loss product, right? Because people will always age into being 45 and people always age out. There's like a new, and I'm not saying they're suckers, right? But you ever heard that saying there's a new sucker every day? It's because there's always just a new, right? So same thing happens with money. So in my mind, when you have this scarcity mindset about money, I never have cash. I happen to have here. You take a $5 bill, I give John a $5 bill, and all of a sudden my $5 is gone, right? But the reality is now John has $5, right? And now John's going to go spend that $5 somewhere else. Maybe then that $5 that gives it to Mike, and Mike says, I need to buy a service from James for $5. So I get this $5 back again, right? Money, like, this is where GDP gets complicated. But my point is that like money kind of is infinite. And the moment that you start realizing that like getting rid of it does not necessarily mean that it's gone. It means that it's going into the ecosystem and there's more of it to float around. You start getting less really scared about where it is, like, and how you're going to get it back.
I'm 100% with you. And like the economy is built on money moving. It's not about, like you actually don't want money to be made ever. Like money printing is actually the thing you want to avoid. You want money to move around. And so I totally agree with you. And that's also why like even things like buy local, support your local store, like that really matters, because when you live somewhere and the stores near you, the coffee shops, the restaurants are getting no business, that is actually bad for you because now you live in a neighborhood that is like crumbling because the local
Totally.
businesses can't survive. So it all, like, it really is circular, and opening your mind up to that is super important. I wanted to ask you something else though. So right now you are kind of at this point where you've done this B2B thing for 5-6 months, and like maybe you're going to stick with it. I don't know how you're feeling about it. At this point, the question I have is, why not just stick with a thing that you're an absolute beast at? Why try to do something where you're starting from level one again?
Because I'm an idiot. I don't know. I mean, I think this has sort of been my life. I think that I jokingly say I'm a lush for pain. I don't know what the reality is. I'm sure there's like something in my brain that's broken that like constantly want to just try and do something that is new to me. It sounds cheesy, man, but I really do believe like we're here once in this lifetime, and we've got one opportunity to actually make things happen. And um, part of it is like this kind of woo-woo serendipity where like this fell into my lap so specifically. I was so lost. I mean, I sat at this desk that I'm sitting at right now, a couple $1,000,000 in an account, brand new car, living in Beverly Hills, like tears rolling down my cheek. Like, I don't know what I want to do. I'm so lost. And I recognized that I was actually really happy when I was living with my ex-girlfriend in a studio because I didn't have enough money and I was chasing a dream that I thought was big and was exciting and working with people I liked. That's cheesy and sounds corny, but is 100% the truth. So I recognize that money is not the key to happiness. I want a ton of money for sure. I love money and I want a lot of it, but it is not fundamentally what makes me happy. So long story short, I just realized I got an opportunity that came across my plate last year to help a financially regulated firm, to help a financial firm as a CMO. And I took on the side a fractional job. And I found this problem while I was at that job. And the point you're saying about moving and it's better for the economy, I spent years sitting at the bottom of the tree trying to become Buddha. Like, the story of Siddhartha, like that, he trying to figure out what's next, meditating on things. And the moment that I just started moving again, the moment I started actually putting my brain at work at things, all of a sudden something really fell into my lap. I came across this idea and I was like, oh, this is interesting. And then I realized that I knew someone who was a fund manager who said, oh, I love that idea. Like, I would put up capital for this. And just like serendipity. And so I don't know what will happen, but what I'll say is this, is that like many of the decisions that you have in life are pretty small decisions. When am I going to make coffee? Like, am I going to hop on the podcast with John at 8:30 a.m. on Tuesday or Wednesday, right? They're not very, very big. But every once in a while, for me at least, you're given an opportunity in life where there's a very clear fork in the road and you can take a chance at trying to go in the not so easy path on that fork. And if it works out, it just changes the rest of your life forever. And they don't happen very often. At 26, it happened for me. I moved to Malaysia. I was like, I got to get out of what I'm doing. I got to do something different. I got to do something new. And I changed my life astronomically. At 31, we ended up selling this business for over $30 million. I only started that business because I moved to Malaysia, like all these things. And so this sort of came to me and I thought, you know what, this is I'm unhappy in where I am work-wise in life. And here's an actual opportunity that if I really just bang my head hard enough against this brick wall enough times, maybe will work, right? And if it does work, it will just change everything for me. And by the way, if it doesn't work, I'm very blessed. I've had a couple wins. I'll go back to doing that's easy. I'm phenomenal at, right? For sure. But I think that every once in a while you're given an opportunity and it defines who you are. Are you the person that looks at this fork and says, you know what, I'm going to go try and do this kind of crazy thing I'm not really good at, but it could change everything? Or am I not? And so that's where I'm at.
I think my standard, like 90% of the time advice to most people is, if you're looking to get to that next level, take the game that you've already been playing and just find a new angle or a new usage. And so you don't have to start at zero. So if you're doing, let's just take like internet marketing, or you're doing law or something, you have a law degree, you probably shouldn't start totally from scratch, but maybe taking that law degree and doing something else, having another application. But I think the other 10% of the time, what actually happens is people are sticking with the thing they've been doing the longest, and they actually are following the wrong rule. In that case, it's like, no. Like, this thing was never that good to begin with. And the example I give is just the personal example, which is I was the enterprise sales guy for whatever, 5, 6, 7 years, because that's the thing that I had started doing 7 years earlier. But it wasn't the right move in the beginning. So like keeping to go with it for the longer time because I had been doing it. I should build another type of enterprise. Like, no, just cut bait. And that was the kind of 10% of the time where I had to say, this is genuinely not what I like doing. I'm not very good at it. I'm not very successful at it. Let me go ahead and try something totally different. And it sounds
Yeah,
like you're kind of playing with that too.
I am. And I think that there is, to your point, and maybe it's sort of me forcing it, but like, if I really think about what my background is, the company I sold in 2020 was a financial media platform. We spoke to retailers. We spoke to consumers. That's what we did. We got people to read about stocks, about equities markets, right? But who was our customer? It wasn't retailers. It was actually public companies that were buying IR packages, investor relations packages from us. So I played in the space a little bit then. That's the biggest one I've had. And then I spent 6 months as a CMO for equity crowdfunding portal, where basically you sell securities, you sell private investments to retailers. And then I did a JV with Agora Financial before that. Like, my point is to say that, like, I've never played exactly where I'm at. But when I really think about the successes I've had in my life, I bought a hearing aid brand in 2021 and sold in 2022. The only reason I did that was because I made a lot of money selling this financial media platform, right? But like, I've actually at my core done a lot of marketing of a financial product to people before, right? And when I think about what we're selling now, even though my customer directly is a enterprise client, the reality is what I'm enabling them to do is to sell their products to retailers, because no one's getting fined because they called up the other fund that they know and say, hey, dude, we're going to do this deal together. They're getting fined because they're making claims to the average mom and pop, to the average consumer, right? And so my point is that even though it's not exactly in my my past expertise, I've looked for, I think it's important to your point though, to look in the Venn diagram and find the skill sets and find really at its core what you've done before and pull it into that new thing. Because I'm 37, it'd be like, I'm not going to go say, unless I really despise my life, and everything I've ever done, I'm not going to go say I'm going to go be a personal injury attorney, right? But like, can I take what I'm good at with marketing and content and try and apply that? I actually think there's magic if you can take the good direct response marketing and the good consumer marketing and figure out how to throw that into an elongated sales cycle so you can compress that trust in an enterprise world, right? Whether it's you're running podcasts or you're running newsletters that are making it so that your ICP now actually trusts you over time. So it's not just a cold call, right? I'm trying to take some of the things that I've done and I'm good at and apply it to sort of this vertical that is banking products. But
and the challenge you run into is you're realizing that enough of the skills that you have from that old world are not applicable enough right now.
Yes, and so that's the wall I'm hitting. So go hop on YouTube, go yap on YouTube. Go yap on IG. That's great, right? But do I know how to build direct response funnels? For sure. Like, and get people to buy a product in the first click, right? That's what I did for long. That's any affiliate marketer is great at that, right? Because you're just getting a cookie for the beginning. But point is that, like, the wall that I'm hitting is that some of the things that I've been great at before are not applicable today, right? And so now I'm trying to figure out how to get better at those things. So, like, how to get better at enterprise sales, right? GTM, like, what's that function look like,
Right. Are you more of a cash flow bootstrap guy or a VC funding person? And is that changing also?
Yeah, it's a great question. I think it sounds really cool, hypothetically, to build a $10 billion business. But knowing me, I don't know if I'd be good at running it. I'm sure the board would oust me way before we got there, right? They'd be like, listen, James, you're not good at
You'd
this,
be
right?
gone in Series A.
Yeah, for sure. Fine. I'll take my liquidity, I'll sell some secondaries and sleep on the beach. But no, I think what's interesting is that the world today, the narrative is told that capital raised and venture is what's sexy, is what's cool, is what's fun. Now, I spent the past few years pitching the exact opposite, where I'm trying to go with this is actually a hybrid in the middle. So I spoke to a lot of funds, and some of the early funds I spoke to were like, oh, great, you're going to make a $200 million company, but that's not really compelling to us, right? Like, I don't want to write you a check right now unless you can tell me the story you're going to tell at your Series B, right? Because we need you to have a multi-billion-dollar liquidity event for our fund. That's our thesis, right? And I've recently found some funds that fit much more what I'm interested in, is like, how do we get to $10 to $15 million in ARR in 5 years, right? And spit off some EBITDA along the way. Because if you get to $10 to $15 million in ARR in 5 years, all the big funds are there to give you more money to take it to 10 billion if you want to.
You have options.
You have options. Optionality is what I'm trying to create here, right? But you also can just take a liquidity event, right? And in the right vertical, and can I build a $10 million business on a 20% EBITDA margin? Sure. Yeah, I've done it before, right? Like it's what I know how to do. And so the smaller funds that I've been talking to and the ones that are New York based, which are mostly like ex-investment bankers who run small, like $50, $100 million funds now, going back to our world of like what's a lot of money versus a little money, like a $50 million venture fund is a very small venture fund, right? And they have a totally different mandate than a $5 billion venture fund. Those guys are like, I actually was very refreshing. Had a meeting last week, 2 weeks ago, with a fund in New York, where the partner was like, I want you to stop talking to anyone who's going to ask you how you're building $1 billion company. He's like, I'll give you money, but you have to stop talking to anyone who's asking you how you build $1 billion company. He's like, let's just go build a $100, $200 million company. And then if the optionality is there to keep going, we can keep going. Or what people don't realize about a liquidity event, about an exit, is that exit only exists because someone else thinks they're going to make more money off that business, right? So like in his mind, he's like, let's go get $150 million and somebody else can take it to a $10 billion company if that's what they want to do, right?
I think building a $10 million or $15 million company is actually a noble business goal for any business, regardless of like, if you want to get to that $1 billion, there's like a very small sliver of companies that I'll call like, the pre-revenue VC-backed company where you're basically all you're trying to do is get users on board and there's no monetization. But like, I'm going to get to 100 million users or 1 billion users. And you're like the classic Facebook or the classic Instagram. But most businesses, even if they're venture scale, they still make money on the way. Like they still sell a product for money and they make money. And so they'll get to $10 million. And then you'll look at them and say, okay, this can reasonably get to 100 million or 1 billion if we pull these levers. But here's the thing, regardless of that, even before you get there, having a $10 million ARR business is freaking awesome. So like, just do that.
Oh yeah. So, I mean, I think having $10 million ARR is, first of all, obscenely awesome. It's also achievable. You also avoid sort of this Icarus type thing, which I think happens in venture a lot, which will bring me to a good story I have with someone from A16Z. Icarus flew too close to the sun and his wings melted and he fell into the sea, right? He a little bit of hubris there. So what's really interesting about venture, I was at a meetup, this like little table, fireside chat with some people from Andreessen Horowitz, A16Z, super famous venture firm, and some other people were speaking. And Adam Newman, the founder of WeWork, had just started his new company. Now, to remind people about WeWork, reached a $70 or $100 billion valuation from SoftBank leading it, and then blew up. Right? Adam Newman, by the way, along the way, made billions of dollars himself, selling secondaries, selling shares, and he was like leasing. He bought the buildings himself in his little vehicle, and then he would lease them to WeWork. He was crushed.
Did you see We Crashed, the HBO special?
No, but I feel
so
like I have
good. You got to see We Crashed.
I definitely need to after this. So I was at this meetup, and A16Z had just written Adam Newman a new check, right? A check for his new startup after everything at WeWork had blown up. And we're sitting in this little 15-person thing, and we get to ask questions. And someone said, has anyone seen, I heard A16Z wrote a check to Adam Newman for his new startup. And the gentleman who was speaking, who was not at A16Z, who was at the fireside chat as well, said, I think that's stupid. I don't know who would ever write Adam Newman a check ever again. Clearly he's just a crazy person. Things don't make sense. And then the woman who was a partner at A16Z got to answer her question, got to give her answer about Adam Newman. And the question was, why would you guys give Adam Newman money after all that? And she said something very interesting, which was incredibly telling to me about venture. She goes, it is my job to make bets when you think they're bad bets. All I do is make bets that the consensus is are wrong bets that no one thinks will work out. That is the only way we make these giant wins. And it was a reminder that the thesis of venture, especially with Andreessen Horowitz, a firm that big, is they are betting on 1,000xers, 10,000xers. And the only way you can find that alpha, the only bets in the world that have a 10,000x attached to them are ones that everyone thinks will not work, right? Because if everyone thought they would work, they would make that bet immediately and it would lose its 10,000x potential, right? And the only reason the 10,000x potential is because people do not believe it works. Risk and reward are inherently tied, always and forever. And the higher the possible return, the higher the risk. So their venture thesis is, let me bet on things that you think are a bad idea, because we think that they're going to win. And it's okay to them that 99% of their businesses will not reach that thesis, right? Then most of them will fail. So it's just a different way of looking at investing.
It's
than
1,000% true. If you had a venture fund that was hitting at an 8 or 9 out of 10 batting average, it would be a very bad venture fund because all of their wins would be the most obvious ones, and they'd be maybe making 2x or 3x. Like that's great for a family office, or that's great for like an S&P 500 investor. But like if you're a venture fund, you either make the 1,000x or the 10,000x return, or you don't get your next raise. You're not getting, your LPs are not putting the money in for them to double their money. They're putting their money in so they can make, like you said, 100 times their money. That's why it's venture. So I totally get it. And I think people also, just like entrepreneurs listening, need to understand the game they're playing. That's so much of success in business, of like, what is the game I'm actually playing? How do I win at this game? Don't try to play someone else's game and then wonder, oh, geez, it's not working. It worked for them, not for me. Yeah, because they were playing a different game. If I was playing basketball and you were playing baseball and I was trying to throw the ball at you, you'd be like, well, what are you like? What sport are we playing here? It's all good, man. This was awesome, James. If you're a listener, James' camera just went out. This is perfect timing, man. I want to end it right here. I so appreciate this. Thanks for coming on today. All right, if you like that, show me some love in the comments section and smash that subscribe button. Plus, stick around because you're going to love this next video.